Well, hello again, Mavi traders, and welcome back. This is Honkits from Mavi Currencies here, and we're back with another market recap for Monday, September the 12th. We are 24 hours away from a very important CPI report. So in this class, let's break down today's market price action, and most importantly, take a look at the next 24 hours and how we're going to position ourselves for this upcoming report. So taking a look at the percentage of turns today, again, we just saw an extension of what we saw on Friday. The equity markets rallied, but we are now getting closer or closing right at that 50-day moving average that we all watching. We talked about on Friday that we were wedged between the 20 and the 50. So we're seeing a bit of an extension, and we are also seeing a bit of a pullback in the US dollar ahead of the CPI. So it seems like the markets are now anticipating a better than or weaker than expected the CPI numbers, which again is positive for the equity markets and negative for the US dollar. So based on where we are right now on this technical juncture here, we are now just right at this key pivotal 20-day 50-day moving average. So at this point, if we can get above this 50-day moving average, I think we'll switch our outlook to a bit more directional to the upside. But it's interesting. We're getting a nice little rally into that report. So tomorrow will be a key price action. If this breaks out, or does this roll over here? So we'll have to wait and see what the number comes out. Of course, we can run speculations, but as we take a look at news events, we can just be ready for all case scenarios. Now, taking a look at the world markets, we're seeing the exact same thing. No surprises. All the markets are kind of working in together, seeing this 50-day moving average as a key resistance. Now, lastly, the cryptos did pull back a little bit, but overall, we've seen the crypto did rally in the past few days, and so just taking a little breather here. So I think all the eyes right now is just going to be on the CPI numbers tomorrow, and based on that, we're likely to move one way or the other. So this precursor could just follow an extension, or we just could totally reverse on what we've seen so far. But as far as a market outlook goes, we are still sitting at a 0. Again, a rule, we are kind of in between that 50 and the 20. So until we can get above that, we will move our outlook to maybe a +1. But I think at this point, the tomorrow's number could really move the things. And last time we had a massive move after that CPI numbers. Again, that was the first below expectation number, which really sparked a sell-off in the US dollar and a rally in the market. So tomorrow number could really bring a big move one or the other, especially if it's way above or below expectation. If it comes more in line with expectation, we might not see that big move, but as a trader, we always need to be prepared for a possible case scenario. Again, oil is down. A lot of the other things that we can argue about seems like we could see a bit of a weaker number, but again, we should be ready for all the surprises out there. Now, outside of the CPI, there's not a whole lot until Wednesday, where we have the Aussie employment report, we got the Kiwi GDP. So let's focus on the CPI in the next 24 hours and base our trades accordingly. So let's do a quick currency analysis and see the daily performance today. And starting with the crypto markets, again, it was all over the place. We had Solana was up quite huge, but then outside of that, let's just focus on main cryptocurrencies like Bitcoin or Ethereum. So Bitcoin was up actually, and the Ethereum was down. So a bit of a mixed price action there. So at this point, we talk about the cryptos and said, well, this is not the best time to buy. It seems like the rally's already happened. So kind of wait and see what the market does and kind of go from there. Definitely more movement in the currency markets. As you can see, that nice little extension in the dollar continues to be on the downside, and the yen, which again was a bit of took a bit of a backseat on Friday, now is back into leading into the downside. So while the yen, the dollar pulls back, we've seen the money kind of going into the Aussie and Kiwi, again, positive or better risk environment. Then we see the money going into those two places. And outside of that, we're seeing a nice little up move in the Swiss franc, euro, and pound. So what's lagging in there? CAD. Why CAD is lagging? Because it's literally piggybacking on what the dollar does. Not to the same extent percentage-wise, which is why dollar is just a better vehicle right now to trade, because the CAD is going to give us a lot smaller percentage move one way or the other. So we'll have to kind of wait and see on that one. But again, tomorrow, we could totally see the upside, the other way around. We could see the dollar pull higher and everything else goes down. So remember, the dollar is really what causing a lot of movements across the board. So the dollar is really what we need to be focusing on. As far as the velocity score goes, I think we can see that the dollar velocity is onto the downside along with the yen. But as a trader, this could, we're ready to make that shift, whenever that happens tomorrow. Dollar could just stay lower or maybe go to -3, or it could just totally turn around and go the other way. So I don't have a strong bias. I think we just have to wait and see where the number comes and how the price action is and trade off that price action. A lot of times I get this question, I don't want to miss a big move, but sometimes it pays off to kind of wait, then be part of that initial volatility, which could be a little bit difficult to catch sometimes. Outside of that, again, Aussie is in a positive momentum here to make note of. Swiss franc continues to be an outperformer. And then we have the euro, pound, and kiwi. So as you can see, as the dollar pulls back, it really lifts everything else up. So we just have to wait and see which one is doing the best and just focus on that. So let's take a look at possible trades ahead, see where we can find a good trading opportunity. And as we jump into trading view, just to take a look at what's the best currency pair that we can find or an opportunity, I think we just have to stick with the dollar crosses. So let's just start with the dollar basket. I want to point out that the dollar is actually now testing that 20-day moving average, which again is important to keep an eye on this 20-day moving average, because in the past we have seen some nice support come in, but a lot of times we've seen this 20 give up back in May pullback. We see the 20 give up back in July pullback. So this time around, I mean, looking at just the previous price action, it seems like the 20 has not been the best to hold off of. I mean, other times we've seen this pullback, but it never got closer. It never pierced through the 20-day moving average. So I think tomorrow this could either have another pullback down to the 50 or have a big jump back up, and we have to kind of wait and see. If we take a look at the expectation, and a lot of times you can do the look at the countdown to the next Fed meeting. Again, you can see that the expectation is sitting pretty high for a bigger rate hike at 92%. So this will be important to see tomorrow if this really changes, if the numbers comes out really weak, and if we see those expectation goes down, we could see a bit of a more pullback in the US dollar. But now looking at a 4-hour chart, you can see that we are actually moving below the 20, the 50. So at this point, I would love to see a bit of a rally. And if the rally fails, that will be a good opportunity to get short. But overall, as you can see in the past, we've seen dollar has been moving very well to the upside. So it's still in an uptrend. And all pullbacks have been a good shorting opportunity. So usually the best short comes where we establish a lower low with a lower high. Then next thing you know, that's the best move to come. So we are still in an uptrend, but just pulling back for the short term. So be careful about these pullbacks in the dollar. So if you start with the dollar yen, we can see dollar yen actually tested that 145 key resistance level that goes back to 1998, and we just will pull back a little bit. So we're still above the 20 to 50. We could pull back a little bit here, but at this point, remember we talk about the negative correlation between the dollar and the yen. Today was a bit of an off day where both were kind of doing the same thing, off by 0.2%. But outside of that, I mean, this trade is still onto the upside. So if the dollar really wants to reverse, so we have to take a look at where the reversals could come. I mean, we saw a bit of a massive move overnight in the euro dollar. I mean, you can see that we almost ran to 102 just to pull back. So far you can see that the euro dollar is getting out of this negative momentum here. And at this point, the question is the pullbacks are a better opportunity to buy? And I think at this point, as long as we keep these breakout points and this prior resistance or become the new support, I think the trend can continue. Now, taking a look at other areas like the Aussie, I mean, that's another pair that actually was doing well today. But I mean, overall, just still don't have that big push to the upside. I mean, we've seen the picture kind of proves. I usually look at the 4-hour chart to see the momentum, and you can see the momentum broke out last week, did pull back, and then got a bit of a continued extension here. So tomorrow, the entire outlook will depend what this dollar is going to do, and if it does well, then I think there could be further extension on these one of these dollar crosses. But if it doesn't, I think we can just fall right back below as the way we have been, and this rallies could be just a shorting opportunity. You can see that the pound dollar did rally now to the moving average there. We can take a look at euro USD. You can see we're just having a big tail off that moving average there. So there's a lot to kind of consider here. So next 24 hours, we just have to find the best against the worst. I think the dollar yen still could be the big one because of the negative correlation. But outside of that, I do find better setups here on the 4-hour chart than a daily chart. I think daily chart is telling us it's just pausing for now. If we can get above these levels, and I think that's what you have to really do, is to decide what levels and kind of go from there. Not really seeing a really good buy here. But if the momentum really picks up tomorrow, I think we could see the dollar crosses either be one of the best currencies to be in or the worst currencies to be in. I think we'll have to see one or the other. And then based on that, we can also take a look at some of these yen crosses as well. So one thing to consider tomorrow is what the equity market is going to do in order to decide which way markets will swing. So we have to figure out what the dollar is going to do, but we also have to see what the equity is going to do. And so far, as you can see, the equity market has been slowly climbing higher. I mean, that big down move that we saw just the end of that September or the beginning of that the time, we've seen that reversal here. So at this point, the sentiment looks positive, and right now, if you just look at the futures, we are right above that 50-day moving average. So everything is pointing out to the upside to me. So I think if we can get a more catalyst, then we can even push higher. But that could also mean that if the market is getting ahead of itself and the numbers don't come out as weak, or they come out not as worse, then that could also result into a bit of a reversal sign as well. So that's really the game plan here for tomorrow. We'll have to see which way it goes. Ready to move one way or the other. I think a lot of the dollar crosses looks like they're ready to move. Especially as the momentum is building up, we could get another push to the upside, and then find out what to pair with. You know, we had the euro, the Swiss franc, and then the Aussie. That remains strong overall, so I think we probably continue using that as a continuation pattern there. But at the same time, if the dollar already had its move and tomorrow's numbers don't meet expectation, then we could be ready for a reversal as well. So that's the game plan here for tomorrow. We'll be back. We'll be keeping one posted. Till then, take care.